Thank you very much. Welcome, ladies and gentlemen, to our conference call. To start with, I'd like to say that we've continued to build on our first half trend and have delivered a satisfactory performance during the third quarter of FY18. Our India business did well in what is normally quite a subdued quarter with a growth of 7% year-on-year. And our India team has managed to maintain a commendable balance between growth and profitability amidst the heightened competition. So we continue to operate at significantly higher margins than our competition. Our international operations has shown quite strong growth in constant currency terms, both in revenue and EBITDA. Dubai continues to grow rapidly as we create it as the hub for our sort of overseas DMC business. And we also see a slight recovery in the UK business, which, as you know, has been a consistent drag after Brexit, but we're now seeing that business stabilize marginally. Our education business reported a stable performance. As you all know, PGL, the third quarter is about managing costs. It's not a high quarter in terms of revenues. And what is good news is that we are seeing a 6% year-on-year growth in new bookings in PGL for the next season, which is strong. And remember that this is on a base of larger bets than the current year. Meininger reported an excellent quarter with both revenues and EBITDA growing strongly. Like we had indicated in November, the cost base has stabilized now, and we expect to report strong growth in operating profit driven by revenue growth going forward. The good news was we opened 2 new hotels during the quarter. Our 6th hotel in Berlin with 833 beds was launched on December 1st, and our 233-bed hotel in Milan was launched on December 18th. Overall, our businesses chugged along well during the quarter. And with that, I invite Anil Khandelwal, our CFO, to discuss our financial performance briefly.
Thanks, Peter. I'll briefly discuss the financial performance during the quarter 3 FY18. The consolidated net revenues grew by 18% YOY to INR 493 crores, driven by the Leisure India and Meininger. Our consolidated EBITDA, excluding foreign exchange gains or losses, grew by 30% YOY to INR 52 crores, driven by Leisure International businesses and Meininger. There was a foreign exchange gain of INR 16 crores during quarter 3 FY18 as compared to a loss of rupees 17 crores in quarter 3 FY17. The strong growth in EBITDA and the foreign exchange gains led to a 6-fold increase in net profit to 96 crores. Our gross debt during quarter 3 FY18 showed a marginal decline and now stands at INR 4,110, while our net debt increased marginally to INR 2,775 crores. The debt increase is primarily due to increase in receivables and capex of 60 crores during this quarter. Though the increase in India working capital is partly due to customers delaying payments citing GST requirements of matching invoices for claiming input credit, we are keeping a tight credit on all the receivables. And since the receivables pertain to very large corporates with healthy financials, the collections, we don't see any slip-ups in terms of the collections. On the foreign exchange business demerger, we have received the approvals from the stock exchanges and are awaiting approvals from NCLT. For the NBFC license, the application with RBI is being considered, and we are awaiting the final approval from RBI. With this, I would like to hand over the call back to the operator to conduct the Q&A session.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Mr. William Hanbury from Viverton. Please go ahead.
Hello. My question is regarding the approval from the RBI on the FX demerger. Is there a timeline that they have to either give or not give that approval? Is there any sort of visibility on when that will or will not come? Thank you.
As far as the approvals from RBI is concerned, I presume you're mentioning about the NBFC license from RBI. Now, unfortunately, there is no timelines which is prescribed by the RBI in terms of either giving or disapproving the NBFC application. Although what I can inform you is that there have been a lot of information which RBI has requested us post the application. We have been able to provide them with all the necessary information, along with also a meeting with the RBI officials to explain the business model in detail. And so far, there are no red flags which I can see from the RBI application approval process is concerned. But unfortunately, there is no timeline which is described by which RBI has to either give you the license or reject the application.
Okay, thanks. Have you spoken to people in the industry? I mean, is there an expectation that it would take a certain amount of time?
We already are actually working along with the consultants who are specialists in this field. We have been talking to various consultants who actually work very closely with other companies as well who apply for RBI licenses. And as of now, I really can't ascribe a timeline to that, neither can they. But I can just tell you that the information which RBI requested has been provided, and so far the information flow has been satisfactory as well as the interaction which we had with RBI.
Okay, thanks very much, and congratulations on a good quarter.
Thank you. The next question is from the line of Kush Sonigara from Mahindra Mutual Fund. Please go ahead.
Yeah. Hello, sir. So, where does the receivables stand now for both consol and standalone basis?
We can just take the question, we can park this question and come back to you.
Okay, fine.
Thank you. The next question is on the line of Shalini Gupta from Quantum Securities. Please go ahead.
Yeah, good evening, everybody. Sir, if you could just give me the gross debt figure. Now you said it's 4,010 crores. If you could give me the similar figure at the beginning of the year, and also the working capital now as well as the beginning of the year.
Yeah, Shalini, this is Ganesh here. The gross debt at the beginning of the year was 3,674 crores. And now it is 4,110 crores.
And the working capital?
So working capital for this year so far in the 9 months has been about 688 crores increase.
688 crore increase.
That is correct.
And so what was it at maybe the beginning of the year, like absolute sum?
I wouldn't have that number right away. I'll give it to you offline.
Sure. And now I just wanted to check, see very clearly working capital in India has gone up. So I'm saying let's take the situation where you're talking about the confusion around GST. So let's say that the situation continues as well as the competitiveness in the industry continues. So do we at all see working capital coming down for India, say in the next 1 year maybe?
So there are two, you had two questions on that. One is that the receivable getting accumulated because of the GST confusion due to the input credit. I can tell you that, as far as that issue is concerned, I think we have seen a significant improvement on that front. And when we see the March financials, I expect that the receivables will come down proportionately because, initial GST days where there was relatively large amount of bottlenecks due to which the collections definitely got stretched. But I think, especially in the month of January and February, we are seeing a lot of things getting back to normalcy. Now, as far as the competition intensity is concerned, what Peter mentioned was actually where there is a relative amount of competition intensity in the B2C market. But, as you would have seen from the performance of the company over the last 2-3 years, the B2B business has grown very rapidly and has also very robustly. And the operating profit margins are as equal to the B2C segment of the business. So, I don't really think from a competition intensity perspective we see, that in the B2B segment, but certainly in the B2C segment.
Okay. And, sir, I mean, if you could, so basically the amount of debt that has been paid off is roughly about 400 crores. Is that so?
Sorry, where are you coming that? Where is the 400 crores coming in from?
Yeah, 4110 and 3674.
Actually, there is an increase. What Ganesh was talking about was the debt level in March was 3670 and the debt level as of now is 4110.
Sorry, yes, it's gone up. Yes. So, I mean, so as I understood it, sir, and please correct me if I'm wrong here, the plan was to pay back about 300 crores of loans every year, roughly speaking. So, where have we? I mean, let's say the confusion around GST settles down, say end of March. At that time, do we see significant amount of loan repayment, or what is it?
No, I don't see a significant amount of loan repayment in March because, while I'm telling you that the confusion is dissipating, it's not really that it's completely dissipated. So there will be a marginal debt reduction in March, but that is only, I see a relative amount of debt reduction in the coming first and second quarters of next financial year. But in March, I'm not really seeing a very significant debt reduction from the level at what we currently are.
And also, Shalini, typically if you recall, in March being year-end, we always see a spike in receivables, right?
Okay.
So that will also coincide with this period.
And sir, just one last question. Like, if we look at the standalone financials, we find that interest has gone up as well as other income has gone up. So, I mean, if you could just explain this, where is this other income coming from?
Well, other income is primarily on account of certain investments which the company always had historically, as well as certain income from treasury operations. So that is basically the other income in the Cox Kings India other income P&L.
Okay. And capex, like what's the capex plan for the coming year?
Well, this quarter it has been around 60 crores, and the capex plan for next year will be around 200 crores odd.
Yeah, thank you so much. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan Limited. Please go ahead.
Yeah, good evening. Thanks for giving me the opportunity. So my question is on the India leisure travel business, where we have seen reduction in the margins for this quarter. I can understand it is a lean business period, but your margins reducing it is mainly because of you also giving certain price off or higher media spends in your segment, or it is more towards to do with the lean business period?
Yeah, Kaustubh, I think it is better to look at the 9 months numbers, because that will kind of, knock off all these seasonal factors. If you see in the 9 months, margins have been down about 200 basis points. This is because of two reasons. One is because of a higher media spend as well. If you recall, we did the sponsorship of 2 movies in the first half. So there was an increase in cost because of that. And also there has been a slight increase in the employee expenses because of a few senior hires that we have had. So these are the two reasons why the margins are marginally down on a YOY basis. Otherwise, we don't see any pricing pressure or any competitive intensity driving down prices.
Right. And how are the bookings for the new season? Like since Q1 is one of your strongest quarter for the Leisure India travel business, so I guess the bookings must have started. So any sense on that?
So, while it is too early for me to actually see a complete clear trend in terms of the booking pattern for next year, but as of today, on a similar trend basis, we are 20% up.
Okay. And sir, a few data points on Mininger for quarter 3. What was the occupancy? What would be the occupancy for the Mininger?
So for the quarter, the occupancy was 73.4%.
And what was it previous quarter?
It was 76.5%, third quarter last year.
Okay. And with this new, with 2 hotels opening now, what would be your current bed capacity in Mininger?
Yeah, so it is, we have taken the pro rata number for the 2 hotels, Milan and Berlin, this quarter. So because they opened only in December, we have taken the pro rata number.
Right.
The number is 9204.
9204. And what would be the actual would be?
Yeah, it will be about 9,704.
9,704. And Mr. Kerkar mentioned that it will go up to 15,000 by FY 2019. So should we expect it in the first half of FY 2019 or latter half, 15,000 beds?
Since we have Hannes on the line, it will be great if Hannes can, detail out the expansion plan for FY 19.
Yes, thank you. This is Hannes here. Thanks for the question also. I think I saw a combination of 2 things, actually, as Dinesh also just outlined, actually, with about 9,700 beds at the moment. We're still actually going to open 1 more hotel in this fiscal year. Even this fiscal year is just a couple of days and weeks, actually. So we're going to open Amsterdam Station at around the 25th of March, adding another over 800 beds into it. So actually coming to that over 10,400 beds, which we anticipated. With regards to the question for the fiscal year 19 about the 15,000 beds, as you know and as we announced, we have 6 more hotels actually to open in fiscal year 19, which will bring us to about 14,400, 14,500 beds, plus 1 additional project with about 950 beds. That's the project in Paris, which is either at the end of the fiscal year 19 or shortly afterwards actually going to open. I mean, we're still in the early development, which will bring us then to approximately 15,300 beds. So very much actually in line with what we predicted. I hope that answered it.
Yeah, thanks, Hannes. One question to you as well. This growth in Mininger, we've seen it is largely on because of the capacity additions, what we have done this fiscal. On like-to-like basis, how the growth has been? Have you seen any improvement in terms of occupancies on some of the old, beds or old properties?
Yeah. To answer it, yes, we also have seen some growth actually in the existing portfolio. Of course, we have some hotels which just opened a year ago, 1.5 years ago, like Copenhagen and so on. So we have a growth also in the occupancy there. And we also have a slight actually increase also in rates of the existing portfolio, which is a healthy growth in that respect. I mean, I can provide actual numbers maybe offline then and via Ganesh, but we have seen also a growth actually on the margins and actually in the revenue of the existing portfolio. But largely, you're right, of course, it's because of adding more beds and new projects into it.
Thanks, Anil. That was helpful. One last to Anil. So you mentioned that this year the debt would almost remain same on YOY basis if we compare it to previous year. But going ahead, still the plan exists of reducing it by 200 to 300 crores if your working capital improves?
Well, I think we are already seeing an improvement in working capital in the 4th quarter. And the guidance for the FY19 will be that we will, aim to reduce debt by around 200 crores.
Okay, thank you.
Just to complete the earlier point that Hannes was making, we've seen a 6% revenue growth and a 9% EBITDA growth on the existing hotels portfolio. So if you look at the same bed growth compared to last year, it's been 6% revenue growth and 9% EBITDA growth.
Thank you. That was helpful. Thank you.
There was one question on the receivable, from a gentleman. The India standalone receivable was around 1,600 crores and the consol was around 2,000 crores.
Thank you. We have the next question from the line of Danish Mistry from Tata Mutual Fund. Please go ahead.
Hi, good evening and congratulations to the team. I had just one question, is that in the India business, how are we seeing a business now with the corporates? Because whilst you highlighted that there has been some confusion on the GST invoice matching and all that, but going forward, especially, how are we kind of approaching corporates now?
There are two parts to it. One is that obviously the B2B business is growing. We are gaining market share as far as the MICE business is concerned, as in the corporate ticketing is concerned. And we continue to add, corporates who are relatively blue chip, have relatively large spends in terms of MICE and corporate travel. So as far as the quality of receivables is concerned, I'm happy to tell you that, there have been no slip-ups and no delinquencies as far as the receivables are concerned. As far as the GST, implementation, as I mentioned, there were only few bottlenecks for a couple of months in terms of, the exact process of submitting the bills and actually collecting the money, which now has been, I would say, fairly resolved. And that's the reason why we see that, things have come back to normalcy. So
is it safe to assume that going forward, if we let's say do something as a service, today, for example, then we would not see any GST kind of GST related delays?
No.
And just the normal working capital cycle?
Normal working capital cycle.
Okay. And generally, when do we think that, most of these GST related things would get kind of worked out? Whilst I understand the March end, we would have a bunching up, but when would the bulk of these kind of be out of the system?
Well, I think, quite a lot of it is already resolved, and I think that, things will be completely back to normalcy probably by next month itself.
Okay. And if you can share a number or just qualitatively talk about it, how much of the 600 crore working capital increase is related to the GST bunching up?
Very difficult for me to, make a guess estimate because the 600 crore is also because of the increase in business. So relatively difficult for me to actually put a number to it, but I would say, it's not just 600 crores, it's also entire receivable. So I would actually say that, we would have seen, a slip up of almost around 20 to 25 days in terms of the normal working capital cycle.
20 to 25%?
Days, 20 to 25 days in normal working capital cycle.
Okay. All right. Got it. Okay. Thank you very much and best of luck for the coming quarter.
So the working capital increase that you are seeing is also a period-end number. So if you actually look at, what we try and explain, if you look at the interest cost and then compute the outstanding debt, then it has gone up by about, 100 to 125 odd crores.
Okay. Fair enough. Got it. Okay. Thank you so much. Thank you very much.
Thank you. The next question is from the line of Rajesh Agarwal from Moneyore. Please go ahead.
Sir, how much in the fourth quarter, 688 crore of working capital will come down by in the fourth quarter? And what will be the interest guidance for the full year console?
So it's difficult to say that how much of that will, get collected. So I think we rather wait for the quarter to end and then we'll update you with the number.
Anil said it got resolved. So how much has come down back or how much it will come down? How much was related to GST?
Well, I anticipate that by the March we would be having around 100 to 150 crores odd of receivable cycle coming down. So basically this is what I estimate based on current working conditions.
Okay.
And the full year consolidated interest cost could be around close to 235 to 240 odd crores.
235. Okay. Thank you, sir.
Thank you. The next question is from the line of Joshaya Go from Saga Tree. Please go ahead.
Hi, thanks management for this call. My first question is on segmental growth in the India business. Can you provide some color on which are the stronger growing segments or maybe for the 9 months? And are you seeing any margin erosion in any of these segments?
So Josiah, we are seeing, the growth for the 9 months in our traditional segment, which is, outbound has been growing strongly for us. As you know, domestic and inbound are very small for us. The growth again is being driven by MICE segment as well, which is a dominant portion of our business again. So these are the growth areas, and that continues for us because these are the modes that we have created for ourselves, which protect us from the intense competition that we see on the B2C side of the business. So I think the growth is being driven by these segments. And on the margins front, like I said, if you look at the 9 months comparison, we don't expect any. We are not seeing any pricing pressure, so to say. And if you compare our margins with competition, then our margins are more than double of what they report, right? And so even if you account for the higher working capital that we face, and you assign an interest cost to that, even then our margins are much superior to competition. So we don't really see any pricing pressure, in the segments that we are operating in.
Okay, what kind of guidance do you have on this segment in terms of revenue?
Sorry, I didn't get that.
Do you have any revenue guidance for the Indian business?
I think what we maintain, our growth guidance of 10 to 12% is, something that we should be able to track. In the 9 months also, if you see, our revenue growth has been 10% so far. So that is what we continue to maintain going forward as well.
Okay. My second question is on PGL. So I think when we met in Mumbai in July, I heard that Kingswood is heavily leveraged and stressed. So maybe you can give an update of the competitive environment with regard to PGL and Kingswood, and maybe Ajit can give us an update if he's on the call.
Ajit, can you kindly answer?
Yeah, Kingswood, as you are aware, has since been sold, and it is with the private equity buyer. They have had so a form of recapitalization has taken place. They have a new CEO now. The existing CEO has moved to a different role. We are not yet seeing any pressures from the Kingswood side, but I would expect that their leverage situation will have improved. But the competitive pressure is reducing also from the local education authority side, which is the biggest player in that market. They have about 50% market share, slightly less than 50%. We have seen that start to break up, which we have been talking about for a long time. We have had at least 2 of the local education authorities who we have bid for getting the business out of. One of them, we might even be able to take on their center. So, yeah, we are starting to see the local education authority, which is the government, funding kind of being constrained, and due to which the business volumes for us would increase from that segment. This is UK in the UK.
Okay, and I also heard that NFC has not been doing so well in the last 2 quarters. So maybe can you give us an update how has NFC done this quarter?
NFC, okay, so this year NFC will have a better EBITDA than last year, not on just because of volume growth. The problem that they have is the security concern. It is NFC traveling into Europe. There still continues to be concerns with parents about children traveling overseas into Europe, because there have been, following terrorist attack, and even if it is one, we have had in France, we have had in Germany, we have had most recently in Barcelona. So because of which there is a fair amount of concern with parents. We're starting to see it start to come back in terms of volumes going into Europe. But the last 2 years, that has been a problem both at NST and with PGL in its France center. Is volume degrowth traveling overseas. That's been the problem.
All right. I have a question for Hans. So normally you guys take about 1.5 years to reach full occupancy for your hostel or hotels. Can you maybe share how is the new Berlin hostel trending? How is it like? Because I mean Berlin is one of you guys are quite good at Berlin, right? So maybe you can give us some update on maybe how is January trending and stuff. And how is it doing relative to expectations?
Yes, thank you. So as you know, we opened our 5th hotel actually in Berlin in December. That's the Berlin East Side Gallery. And from the trading actually in that respect, we had a good performance actually in December. So we are pretty much absolutely in line is actually what we expected. And also the outlook actually into fiscal year 19, especially for this property. And we are opening a 6th one also in Berlin actually mid-2018, about June, July. Is actually very much aligned. We're always slightly lower in the occupancy in the first couple of months, but especially in Berlin, it's our home market to a certain extent as well, Germany in that respect. So we are going to come pretty close actually to the mature figures and the occupancy of the other Berlin hotels which we're having. And of course, to a certain extent, it always depends also on the micro location, and both new hotels which we're having, the East Side Gallery, which is operating now already, and the Turmstrasse, which is coming in a couple of months, and a very good strategic location in the micro location as well. So we are very optimistic actually to also achieve the targets in that respect. Slightly below the existing hotels, but this is, as you correctly pointed out, it's always a slight ramp-up period in the first 1.5 years. In the case of Berlin, we will not even need a full 1.5 years to come up to the full occupancy level and the rates in that respect.
All right. Thank you, guys.
Thank you. The next question is from the line of Falguni Datta from Jet Securities. Please go ahead.
Yeah, good evening, sir. So I just have one question on the segment results where we see other unallocated income or expenditure, which is an income of 20 crores this year versus an expenditure of 38 crores last year. So what is this about?
This pertains to exchange gain or loss between the segments that gets segmented in that line item.
Okay, so this is entirely the exchange gain or loss swings.
Right.
Okay. Thank you. That's all so much.
Thank you. The next question is from the line of Ronald Chin from Vibrant Securities. Please go ahead.
Hello, sir. So I was looking through the numbers, and in your IP, the third quarter FY17 numbers are a little different in this year's IP and the IP in third quarter FY17. So if I just look at the Leisure International continuing operations, so in third quarter you did a revenue of 77 crores according to this year's IP, and according to the IP of the last year you did a revenue of 87 crores. So which number should we look at?
Yeah, please go by the current quarter's presentation, the comparative numbers, because there's been a slight reclassification.
And this has been for every segment, so for education, except for the Indian leisure, all other segments have some difference.
Right. So it's got reclassified. Some of the numbers in education have got reclassified into the Leisure International and all that. So.
Okay. So the current numbers are to be looked at?
Yes, please. Yeah.
And my second question would be about the visa segment. So we were bidding for a project in Europe. So what is the status of that project? So did we get that bid?
See, there are, I think, multiple contracts which are there in the pipeline in Europe. I don't know which specifically you're talking about, but these are bids and these contracts take a long time. It involves the government, embassies and all that, right? So it takes a lot of time for these contracts to get finalized. So we're bidding for a lot of these contracts, but we can't set a timeline and we can't say, how many contracts we will win.
Are you allowed to disclose the contracts that we have, any contracts that we have won in this recent quarter?
If there are any contracts that we have won, Ganesh will obviously be happy to share that details with you. But the contracts which are being bid, for which the outcome is not known to us, we would not be in a position to share that.
Okay. So is there any contract that we have won in this quarter or any other? Can you share that?
No contracts this quarter.
No contract. Okay. And thirdly, like in the other segment that we have in the segment presentation, so that is related to visa only?
Yes, you're right.
So only visa is there. So I can take it as the visa processing segment, right?
Substantially, it is the visa processing business. There are some ancillary businesses which also gets classified in others. But I would say a substantial portion, in fact, the visa processing business gets classified in others. So if you need, a breakdown of the visa processing services within the other segment, Ganesh will be, happy to take this offline and give you the details.
All right, I'll do that. Okay, that's it. Thank you.
Thank you. With the follow-up question from the line of Rajesh Agrawal from Moneyore. Please go ahead.
My question is to Mr. Peter. What exactly happened in Dubai operations this quarter, and is it sustainable?
See, basically, Dubai is our hub not just for destination management into Dubai, but we have a lot of contracts. For example, WebJet, which is a large Australian player. They initially started with us in Dubai, but now they buy through us for Japan, Europe, India, and all this is processed out of Dubai.
Okay.
So it's not just relating to our incoming services in Dubai. It's related to our global billing as a DMC.
Okay.
And we have multiple contracts with cruise companies, with tour operators, and all that is hubbed in Dubai.
Okay.
So there's no reason for us to operate that out of India when it's an international transaction.
Okay.
And you're aware that, there's no need to do it here because you just add additional costs on. Whereas Australian who's going to Japan, there is no point me processing it out of India. Okay. So that is the critical reason why you will continue to see substantial growth in Dubai as we get more and more contracts globally as a DMC operator for other destinations other than India.
Okay.
Yeah?
Okay. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question. I now have the conference back to the management for their closing comments. Thank you, and over to you.
Okay, thank you all for joining on the call. Please do give me a buzz if you have any further queries or if you need any data points.
Sure. Thank you very much.